Hey, Bulls and Bears. Hope everyone is doing well. We're back with another dose of economic reality slash financial news. Today, we're going to talk about the car market. And yes, we talked about this just a few weeks ago. And we talked about how used car prices are coming down. Well, some more news on that. There's a recent article out, actually, a few different articles. The one I was looking at here today, just a minute ago, was out of the Hill. And what they're talking about is how car dealerships are price gouging, and not necessarily price gouging. They didn't use that phrase or that term, but here's what's happening. Wholesale prices, the prices that are going at auctions, what dealers can get cars for at auctions, and you too, if you can find an auction, you can go to yourself and get a vehicle at an auction if you find a public auction. But these prices at auctions are coming down very quickly compared to what the dealer prices are doing. So here's the deal. Out of a Manheim Used Vehicle Index, car prices are down over 10% from a year ago. Um, Dealerships, not so much. It's around 5%. Now, there's a time lapse between the price paid at auctions versus what's being sold at the lots. And there's a few different components, and we'll get to that in a minute. But first of all, a lot of the dealers are still keeping their prices elevated because they bought these cars in some cases 6 months, some cases a year ago, some cases even more, depending on how long the car's been sitting on the lot. So just because prices are coming down in the wholesale area or in auctions doesn't mean you're going to see it immediately at the dealership. Now, I did a video last month. I was at an RV dealership, and I talked about in that video about how wholesale prices on RVs and motorhomes both had dropped pretty significantly. And some people in comments were saying, "What are you talking about? I can't find a new motorhome for less than 100,000." Well, of course not. That's because you're not going to get wholesale. A dealer is going to get wholesale, but then they're going to, of course, mark it up. That's business. They have to make a profit. So they're going to mark it up. So you're not going to get what the wholesale price is in most cases, unless you find somebody or a good connection or a really nice salesperson. But back to the cars here, dealerships, of course, are going to get high price, top dollar for the vehicle. I wouldn't even call it price gouging. I would just call it business. And as long as people are out there taking out loans and not worried about how much debt they're getting in and still buying these vehicles, then the dealers are just going to keep prices elevated. Now, it's harder now for people to qualify for more expensive vehicles. So because of the high rising interest rates in a rising rate environment, but people are still taking out loans. Banks are still lending. They're loosening the guidelines. Look at the credit cards that we talked about just a couple reports ago. How subprime credit card issuance has exploded from last year. So banks are loosening the lending in certain areas, especially credit cards. And auto loans, we've already seen a loosening in the lending in auto loans. We've reported several times about the big uptick in the subprime auto loans and how the default and the delinquency rate on those is rising very rapidly. But here's the thing, it still takes time to play out. So you may not see immediate price drops at the dealerships. In fact, some people on this channel down in comments, I do read your comments, some of you have said you haven't seen any change in the price of used cars. Well, it's going to take some time. Again, people are still taking out loans. They're overspending on these vehicles. And as long as suckers are out there going to buy at these prices, that will buy at these prices, then the dealers aren't going to come down on their price very quickly. One, they paid higher prices back at the beginning of the year and over the summer, so they have to try to get at least what they paid for it, plus still make a profit. Otherwise, they're not going to stay in business. But then two, even if they paid lower for the car, and the profit's going to be there, they're still going to get as much as they can out of the vehicle, right? So until people pull back on taking out loans and buying cars and buying things they can't afford, don't expect prices to come down that rapidly. They'll still come down somewhat because of the rising rates, but people just are not thinking, and a lot of people don't really follow even news like we're giving you today. A lot of people don't know how prices are declining now, right? And many people just don't notice it. Even though it may be happening, they still don't notice it because it's so small. You see what I'm saying? So this is going to take some time to play out. I think by mid 2023, we're going to see some real noticeable price drops in vehicles as more people default on their loans, as more cars are repossessed. It's about 15,000 cars per month right now that are being repossessed. We talked about that a few reports ago also, but I think that number is going to continue to increase. because people are getting further in debt. People are not paying off debt. People did pay off debt for a short period in 2020 when tens of millions of people didn't have to pay rent and mortgages, and um, even credit cards stopped demanding payments for a period. Auto loans. We had many rescue programs that most people know about here, the enhanced unemployment benefits, the stimulus checks, and all that that happened. But now, ever since then, now we've seen debt continue to increase, right? So things are not getting better in the debt direction, in the debt department, I should say. Things are not getting better in the debt department. So, of course, we expect cars prices to continue to come down with rates being elevated and going higher. Now, when we talk about dealers charging too much, we also have to go to the oil and gas industry, because there's been recent news out there that there's blame being put on the oil companies for charging too much for the gas. Same argument. If people are going to pay the price, if people are buying the price, if they're paying the price and buying, making the purchase, then why would they come down on their price, right? So it's simple. It's supply and demand. So what are you going to do? Force the oil companies to lower their prices and force gas stations to lower their prices, even though people are still buying their product? It doesn't make any sense. So if people really wanted to see price corrections, maybe people need to stop taking vacations, stop going on trips. But that's not going to happen. I wouldn't expect anybody to do that. People love to travel, and people will travel, and people will entertain themselves and do unnecessary activities to have a good time until they're bankrupt. Right? It's the American way. Buy now, pay later. That's the one of the mottos of the American people. All right. Now there's a few more articles out here. Carvana is really suffering from the slowdown in used car sales. And yes, there is somewhat of a slowdown, but not enough to make the dealers drastically cut their prices. But Carvana, they're really feeling it, and it's a huge drop in their stock price. Shares fell 40% on Friday alone, following a Morgan Stanley analyst move to suspend his rating and price target for the company's stock. Here's another article here. Carvana had been growing quickly as used car prices soared after the pandemic, but has been caught in an environment where rising rates and high prices have sent many potential car buyers to the sidelines. And Carvana reported a $283 million net loss just last week. So Carvana feeling the pain here. Will they start selling their cars at lower prices? Well, we'll have to see. There's another article here out of Bloomberg. Subprime auto bonds hit by skipped payments, falling used car values. So what do lenders do with their books of loans? They sell them off in the debt market, sell them off as securities, as bonds, and now the values of these bonds are plummeting. And that's another thing too, when banks can just sell off their debt, and when you have the buyer and lender of last resort in the background taking the risk off of the banks, taking the debt off of the banks, that's another reason why you see so many people still qualifying for cars, because banks are still lending, even though they shouldn't be, really. If you look at the risk currently at these car prices, if you were running the bank and you actually didn't have just the buyer and lender of last resort in the background, if you were running the bank and you knew that you'd be on the hook for these losses, you wouldn't be giving out the types of loans that these banks are giving out. You wouldn't be doing so many subprime loans, so many people with little or no down payment, so many people with terrible banged up credit and low credit scores, and and lack of income. You wouldn't do that if you actually were on the hook for it. They know that basically the debt market is the rescue system in the background, where the buyer and lender of last resort buys the debt. Now, there's been less of the buying, so it's putting a little more pressure on the lenders. So we'll have to see how it plays out. I'm continuing to hold my horses on any vehicle purchases right now, because I can see the writing on the wall. Prices are not coming down as fast as I want, but that's true for anybody that's waiting to make a purchase. You want the price to come down right now. And that's another thing. A lot of people just don't have any patience, even though some people may know that 6 months down the road, prices may be a lot less. They still want it now. And that's what we've kind of been, I don't want to say the word trained. That's what we've been accustomed to, is you want something now, get it now. Don't save up money because you have the credit card and you can go into debt. And then if worst case scenario, you can file bankruptcy, not the end of the world. I know plenty of people that filed bankruptcy. and it's not the end of the world. Some of them got credit cards immediately after filing bankruptcy. It's crazy. So this is what's happening with the used car market, and we'll keep an eye on it for you, but it's going to be a slow motion decline. I think mid 2023, it's going to be noticeable to most people, even the people that aren't really following reports like this and paying attention. So everybody, thanks for watching this today, and please like, subscribe if you'd like to support this channel so we can keep these updates coming to you on a regular basis. Thank you so much, everybody, for being here. Bye for now.